I'd like to thank Kenneth, our moderator, for putting aside time to be able to lead this discussion. And probably in a special way, I'd like to thank our panelists who are subject matter experts in each of their areas. And I can't wait to listen to what to say. Briefly to talk about Marsh, Marsh in Uganda is a wholly owned subsidiary. We have been privileged to put together a team of very experienced people in their fields, and I'm sure the moderator will tell us who they are. And all I can do at this point is to thank you once again for being on here, and also to wish you good deliberations. Over to you, Kenneth.
Thank you very much, Alex, and thank you very much, Anne, and welcome to everyone who's been able to make it today. We hope that we'll use the next 40 or 50 minutes to enlighten ourselves on what assurance and risk alignment is all about. Please allow me to start off. I'm going to ask all the panelists to put on their cameras as I introduce them. Starting off with Flavia and Anyiko. Flavia is a civil engineer who is also a risk professional, which is amazing. Eh? So Flavia is a civil engineer by training, and Flavia is also an experienced professional risk management, experienced in risk management profession. She's a certified QMS auditor. You need to tell us what QMS is all about, I think, when we go into a bit of the detail. And holds a degree in civil engineering as well as a master's degree in transport planning and engineering, and a postgraduate diploma in project monitoring and evaluation. Flavia currently works with an electricity generation company limited, where she's currently a risk manager. Welcome. Yeah? And to continue, next, Blessing and Nshaho. Blessing, I hope I'm pronouncing that properly. Blessing Nshaho. Blessing is a chief corporate and retail officer for Umeme, the largest distributor of energy in Uganda. As we know, more than 90% of the distribution network is run by him. His career spans over 18 years, where he's been a CEO of a consultancy firm known as Asset Business Solutions. He has also worked as an executive director for advisory services and business development with Ernst & Young, East Africa, and served as an associate director with Ernst & Young Global in London. It is such a long CV. Blessing is also a fellow of the Association of Chartered Certified Accountants, UK, and has a bachelor's degree in psychology and statistics. Welcome, Blessing. And that, and no list is Tendayi. Tendayi, I'm going to have to ask if I'm pronouncing your second name properly. Pswarayi.
You are close, Kenneth, and you are forgiven for killing, but you got the first name correct, which is good.
All right, you're going to have to correct me on that. Apologies. So Tendayi, you come from an enterprise risk management background. You're the enterprise risk management lead for Marsh Africa, with your career spanning over 20 years, Tendayi, in various roles across Marsh and across other entities. Tendayi, I'm going to ask that as part of your intro, you tell us a bit more about what enterprise risk management is when we go into the question and answer session. But you're working as a senior consultant in ERM, as it's known, enterprise risk management practice within the Marsh Consulting and Advisory Services. 20 years experience in governance, risk compliance, insurance, and you've worked across various levels within Marsh. Ask you to talk more a bit of. Tendayi, you're very welcome, and thank you for being with us. Ladies and gentlemen, I would like to start off by just getting a sense from our panelists. And Tendayi, I would like you to go first. What does insurance and risk management really mean to you? What are your views on it?
Thank you, Kenneth, for the introduction. Good evening to Anne, the fellow panelists, as well as participants for who have attended, who are attending this session. Insurance and risk management is such a broad topic. For me, risk management is about looking at an organization's objectives, doing an assessment in terms of what can possibly go wrong in terms of achieving your organizational objectives, doing an evaluation in terms of what is the impact, what is the probability. Once that's done, it's then looking at what solutions do we need to put in place to minimize the risk or the impact of the risk materializing. Then once that's done, right, one can then consider, as part of your mitigating strategies, transferring that risk to an insurance company. And we've got various means and structures or programs of doing that. I think if we just look at the impact COVID has had, at an organizational level, at a country level, as well as at a global level, it has really got, I think, literally everyone at a personal level, as well as at an organizational level, it's really gotten everyone to start asking the question, how best do I prevent the chances of me and my family contracting, the COVID virus? So what I'm then trying to allude to is the fact that and COVID in itself has actually highlighted the importance of risk at a personal level, but more so at an organizational as well as at a global level. So it's about looking at what can possibly go wrong and financial burden in the event of an insured event taking place. So you then engage the services of an insurance broker like Marsh. We can help you, with placing your insurance program with a reputable insurer who will then cover or pick up the financial losses in the event of an insured peril. Kenneth, I would want to stop there and hand the floor back to you.
Thanks, Tendayi. I've had you really bring out some interesting points. Back when I was at school studying actuarial science, some of these things have rung true. Risk is about assessing what can go wrong and evaluating the impact and probability, right? And then putting in place meeting and so transferring it to other people. Very mathematical terms. May have to break them down a bit more later on. Moving over from you, Tendayi, and coming to you, Blessing. Umeme, with all the infrastructure and investments that they're putting into this country, undoubtedly has a lot of risk that they carry on their books on a day-to-day basis. I just want to pick from you, Blessing, what your view is around insurance and risk management in general.
Thank you very much, Kenneth, and good evening to everyone, wherever you are. So yes, as Umeme, we do carry significant risk. We are running a network at 33,000 volts, 11,000 volts, 415 volts, 240 volts at different points on the network. It's a live network and therefore it's dangerous and it kills. With that comes significant risk. And there are quite a number of risks that we run. So for instance, when you want to think about what could go wrong in Umeme, we start off with that somebody could get in contact with the network and actually die. So how do you deal with that? Because people will then be coming to make claims, for the death of their loved ones and so on. And therefore, we take out insurance, we transfer that risk. We have, people who have to drive around to cater to the needs of customers who have gone off supply, need to be reconnected, but they're driving those vehicles could get involved in accidents. So we insure the vehicles to make sure that in the event that there is such an accident, we're able to recover the cost of that. There's quite a huge number of categories of risks that we actually transfer by insuring against them. For instance, one of the latest areas in recent years that we've looked at insuring is against cyber risk, so cybersecurity breaches. How do you deal with that? So I think when it comes to risk management and insurance plays a very big part for us here at Umeme because of the nature of our business. I know that Tendayi spoke a lot about enterprise risk and how you deal with that. So I don't want to go back into that, and just wanted to focus on some practical examples. I hope that answers your question.
It does, and introduces, right now, I think the core risk in every industry is cyber risk, and it's an interesting one. Maybe at some point Tendayi will tell us how to properly evaluate this risk and set up probabilities for it. It's something that I think is quite topical. Flavia, over to you. You prepare the power that then gets given to transmission to send it to Blessing to be able to distribute it to all of us. So tell me about risk management within UEGCL.
Thank you very much, Kenneth, and good evening to everybody. We do not operate outside risk. Even as human beings, you cannot eliminate risk entirely from your life. I want to speak to the close link between insurance and risk management. We know that the history of insurance can be traced back to the 18th century, and that is when it at that time, like big fires, like the Chicago fire of 1871 that started in someone's cowshed, and next thing you knew, the whole city was razed down and about 300 people died. Now, to rebuild that city called for financial resources, and insurance companies rose to the occasion by paying the amounts they were obliged to pay in damages. And that was a very big impetus to rebuilding the city. So for a long time, risk management has been associated with the use of insurance to protect individuals and companies from losses, especially financial losses that are associated with different accidents and hazards. Of course, today risk management has matured and developed as a practice to include several other risk reduction measures besides insurance. Although insurance remains an important risk reduction measure, and it's especially important for us here at UEGCL. During the construction of hydropower plants, we face risks such as unknown ground conditions, turning activities, project delays, health and safety risks. We operate in that kind of environment. The same applies to when a plant is actually operational. Are you prepared for a flood, a fire? How do you protect people? How do you recover from such an event should it occur? So insurance gives us the security and the comfort to operate with the sense that in the event that we have such a risk materializing, the impact is reduced to a great extent, at least financially. And from insurance, we also benefit a lot from the collaboration you get with these insurance companies. They are specialists in this area, so they offer a lot of support to help us better identify and assess some of these complex risks, because they're in this business, they're exposed to probably more data than we are. So in that, they actually help you design loss control measures in your everyday operations that emphasize your protection from these risk events and can ensure sustainability of your business. Thank you.
Thank you, Flavia. Thank you very much, everyone. Just to remind those on this chat today that you can always post questions in the chat as the conversation goes on. Tendayi, back to you. And I just wanted to get from you on why is strategic risk management important, and why would you push companies to do it, and what do companies need to do to start off and developing this work plan?
Right. Thank you, Blessing. Sorry, thank you, Kenneth, for the question. I just want to maybe add on to what Blessing and Flavia, spoke about, as they did the opening remarks. The common thread, right, across what Umeme and UEGCL is doing is they first start by understanding their landscape. So they first say, what is our organizational objective? Is it distribution or it's power generation, right? That's the starting point, right? It's all about why are you in business and what do you intend to get out of, from the process. That having been said, the next step is then to look at what we call your risk universe, right? And risk universe, we're saying, identify, call it showstoppers. What can possibly go wrong? What can impede an organization from achieving its strategic objectives, right? Here I'm now bringing in the aspect of strategic risk management. That having been done, you've then laid your map and you've said, these are the key showstoppers, and those are the risks that at a board level or from an executive level, those are things that keep executive awake at night. If they hear that, as an example, maybe for Umeme, load shedding, as an example, right? From an executive as well as from a board perspective, those are some of the worst things that you expect or want to be told. So we lay, we identify the strategic risks, then we get into that evaluation process that we spoke about. Insurance then comes at the end of the process, but insurance does not take away an organization's ability to manage a risk. What insurers then do when you go out into the market in terms of placing your insurance portfolio, they do give, concerted rates or discounts based on your enterprise risk management program, because they tend to reward, organizations put in place an ERM program because they say this entity is capable of managing their risks appropriately, right? When it comes to then strategic risk management, we've said risks that pertain to strategy have to be managed by executive, but more importantly, the board has to be aware of, call it the showstoppers. What then strategic risk management becomes important is because it enables or it creates the right visibility. The board is ultimately call it the structure within an organization that has to make sure, or that holds management or executive accountable when it comes to management of risk. The board's responsibility is to provide oversight. And with providing oversight, it then means that where necessary financial resources are required, the board in their strategy session also have to take that into consideration. That's number one. Number two, it's also about protecting, the shareholder value. In private entities, you'll obviously have a shareholder. In public sector, yes, you do have a shareholder, and the government might be the biggest, might be the shareholder. But at the end of the day, whatever financial resources that are being invested in a public entity or a public or private entity, the shareholder is expecting a return. That's the second point. The third, with strategic risk management, it also gives you an opportunity to quantify your risk, right? And by quantification, you need to do a bit of, call it scenario planning or a bit of modeling, where you need to say, if this risk was to materialize, what impact is it going to have? You know, what impact is it going to have on the organization's bottom line? And that then also starts addressing a key component of risk management, which is risk appetite and tolerance. Risks that are within your risk appetite, you then have the option of saying, we can manage risk, we can tolerate it. On the same vein or same token, risks that are beyond an organization's risk tolerance is what you then slowly start thinking of transferring to an insurer, right? So strategic risk management then affords you an opportunity to start having discussions in terms of what financial impact is going to have at an organizational level. But risk is not only about, you know, the side, what can possibly happen. It then also gives organizations an opportunity to start looking or having discussions around what opportunities does risk management present to organization. I'll give you an example of one of our clients who is in the sugar production industry. When COVID, hit us in Africa, which was around about March, everyone went to a lockdown. With lockdown, a lot of organizations were affected because they were not able to produce or operate at 100% capacity, because it was only the critical stuff or services that were required to be functional. What this entity then did is, because they're in the sugar manufacturing industry, one of the byproducts of sugar production is ethanol, right? And which happens to be a key component of what you have sanitizers. Because if you look at that sanitizer, casing, it will always say, so what is recommended by the World Health Organization is to say 70% alcohol content. So they then formulated a new production line whose key responsibility was actually to manufacture or to produce ethanol. The impact that it had at this organization has been that their sales or profitability has actually gone up by 30%. And they've even said within over the 100 years they've been in existence, this is probably their their best financial position or financial performance. So what we're then saying is strategic risk management also starts addressing what are the key opportunities that are going to come out from this process. So it's not just about the downside, but it's also looking at the potential upside of when organizations go out and engage, your stakeholders, other stakeholders want to get the comfort that risks are being managed, have been identified and are being managed appropriately. You go to a bank, you want to borrow money as an entity. The bank is going to consider what's your risk management program and what guarantee do we have that we're going to get a return on the investments or in the money that we're going to lend the organization. So the benefits of the request from a strategic risk management perspective, they are immense, they are broad. I'll stop here because I'll give others an opportunity. I can go on.
I can sense the passion Tendayi in this conversation. This is, you definitely live for this, and thank you for that. And as you're talking, I pick up on the three elements: identification of the risk, evaluation and quantification, and then mitigation or acceptance of the risk tolerance, which I think for me is an amazing framework that anyone who's looking to start on a journey of developing a risk framework can go through. And it's amazing the story you tell around the positive results of COVID and as a new and emerging risk. I'm going to take this back to Flavia just to get a sense of, given the journey that Tendayi just spoken about around what ideally one should go through when developing a strategic management framework. I just want to hear from you what the experience has been in UEGCL, whether you followed this or you had your own process. What were those key emerging significant risks, and how did you go about mitigating them?
Thank you very much, Kenneth. Our journey at UEGCL has not been very different from what Tendayi has talked about. We started with our mandate. What has government entrusted us with, and what is government's expectation of us as a government company? And our purpose really is to establish, maintain, and operate electricity generation facilities. We are also looking to promote research and development in the generation sector, and want to do all this while running the company on sound business principles. So our objectives as a company stem from that. And as you know, government has invested quite a bit in UEGCL to enable us execute that mandate. We know the construction of Isimba that is now running, Karuma, Nyagak, projects Zizi. These are projects that do not come cheap, and government has made these investments with the sole aim of having sustainable, reliable, and affordable power for the country. And all this is to steer socio-economic development. So you see, these objectives come right from the government, and to UEGCL, we are trying to deliver on those objectives. So we started by asking ourselves, we have these objectives to meet. Of course, we break them down into 5-year plans and annual plans. We want to be able to deliver Isimba, have it operational, but several things could go wrong. What could prevent us from realizing that objective? That is the first step. We have a number of financial objectives, operational objectives, objectives in the HR sense, that do we have the right skills? Do we have the right people? Are they adequately trained? Because if you have a power plant there and the operators are not able to run it, then you're not meeting the objective of delivering power. So by being able to, first of all, identify and understand what could get in the way of us meeting our objectives as a company, that is where our risk management journey started. And this is a discussion that the entire company is involved in. Yes, it starts at the board and the management level, but the risk manager is actually everybody. The operator down in Isimba is facing day-to-day risks in their day-to-day work. So they also need to understand what the board is looking to achieve and how they contribute to that. But they can manage risks within their day-to-day activities. They're able to identify that, you know what, if I do not follow the standard procedure, I could make a mistake, and we could have a forced shutdown over a mistake or over a skip in the procedure. So that process of identifying risks helps us to agree as a company on measures to mitigate these risks, to avoid certain risks, to prevent certain risks in some cases, to invite the support of insurance companies. So continually, of course, because your environment is not stagnant, because our internal and external environment is not stagnant, the risks that we face continue evolving, they continue to change, they increase, they decrease, some die away completely. An example, as you all know right now, is nobody anticipated that would spend 2020 affected by a pandemic. And this was quite for us because the objective has not changed. We must deliver power. But now if the country is in lockdown, can you shut down the plant? No. So we had to come up with mitigation measures against that to protect the staff at the power plant from contracting this pandemic, and to also provide backup in case one of them contracted the virus and the entire team had to be evacuated. So those are the kinds of strategies that we have in place to get against and the end result is that when we meet our objectives, company performance improves, we have safe working environment, staff are motivated, and government assets are protected. Thank you.
And thank you, Flavia. It's interesting that you end there on a note around the impact of COVID-19 on you as UEGCL, and I'm seeing a few questions coming in. Kenneth and Juliet have noted your question, and I believe Juliet's question nicely flows into what I was going to chat to Blessing about, which is around, COVID. Umeme still needs to deliver power. Umeme still needs to push new connections. Umeme still needs to manage the current sites. And I'm going to ask my question by putting it together with Juliet, and allow me to read it. So Juliet says that the impact of COVID has gone further to affecting supply chains of raw materials, spare parts, etc., and increased lead times on the overall as international travel and shipment has been greatly affected. This means that business interruption risk has then evolved and may have to be reassessed. Entities like Umeme, UEGCL, etc. Would most likely face this. I would like to understand what strategic risk management responses are being taken at this point in time to address and keep at bay these new risks. And I guess that sort of flows into my question as well. Blessing, would you like to just give us your perspective from Umeme's side?
Yeah, sure. Thank you very much, Kenneth. And before I answer that, I just want to build a little bit on Umeme's perspective of risk and how our journey has been. Umeme is quite a complex entity. We're a concessionaire. We have 2 licenses: a distribution license that allows us to make money through building the network. We expand it, we invest, and we earn a return. We also have a license for the supply of electricity. So ability to purchase power from transmission, then sell it to the customer, and collect money on behalf of the sector. And we have targets on losses, targets on collections, to make sure that we are able to fund the sector through the tariff so that the sector itself sustaining. But being a public company also increases the complexity because we have over 5,700 shareholders across the globe. 35% owned Ugandan, 75% in total Africa ownership, 25% abroad. And we are regulated by the Electricity Regulatory Authority, but also Capital Markets Authority Kenya, Uganda Securities Exchange, Nairobi Stock Exchange, and so on, NEMA, etc. There are so many authorities that are regulating us, UCC, etc. Consequently, when it comes to risk management and looking at the risk universe, it gets quite complex. We also have a power sales agreement with transmission, a lease and assignment agreement with distribution, and a support agreement with the government of Uganda. So we have to manage that entire framework. Now, when we speak about how we develop our strategic risk management, we look at risk at the strategic level, the tactical level, and the operational level. And at the strategic level, we are then able to deal with the board. We meet with the board, once every quarter at a minimum. And at that session, through the board audit committee, we present the enterprise risk management report. That report, of course, highlights all the key developments globally, regionally, nationally, including issues to do with the COVID-19 virus. We also deal with the macroeconomic environment analysis, or what you look at as your PESTEL, look at the political, economic, social, technological, environmental, and legal challenges and developments that may face the company. We then break those down in terms of looking at our business environment assessment, where we look at the core external, core internal, emerging areas, and business changes. So a simple example going to this specific question around the core external is of course COVID-19. And then you build that into our enterprise strategic risk register, and where we talk about the top 10 risks for the business with the board. Now, when you look at, for instance, COVID had two impacts or two risks that we had identified. One, of course, was loss of talent in terms of the potential loss of lives as a result of fatalities. And then the other had to do with the financial losses around the higher costs and the failure to achieve the targets as stipulated in our license. Now, when you look at our license for the distribution of power, which is heavily reliant on the supply chain for raw materials, spare parts, etc., we noticed COVID coming in December last year. We analyzed the environment continuously. And the reason we noticed it in December was because that's when it hit China, and China is one of our biggest suppliers in terms of cable, transformers, meters, etc. And we could see the impact the lockdown in China had on them. And we realized that we're going to have a problem. So in terms of what we did at that point, we quickly put together an update of our business continuity plan, but also we had to develop a pandemic management plan, because if you talk to most organizations, they'll probably tell you that the business continuity plan did not specifically in detail cover pandemics. We documents having this pretty fast, we were able to then respond to the risks associated with the supply value. And that was the #1 risk, even on our strategic risk register. It's #1, safety, because with people, you can do nothing. And therefore, we ensured that we put in place all the necessary protocols, even before the government of Uganda had identified them. So bringing in lasers, masks, these temperature guns, etc. We learned from the Chinese and started implementing a lot of office occupancy. But we also engaged with the police, we engaged with the government to ensure that they gave us right of way. Even during the lockdowns, we were able to operate and maintain the network, even during curfews. And that is why if you talk to most customers, you find that during the pandemic period, Umeme was one of the best performers in terms of utilities. Why? Because we had already prepared well in advance, having noticed all these risks and taken care of those. The only thing that we didn't see coming was the government failing to pay us on the electricity connections policy. While we had when I say didn't see it coming, I don't mean literally, because we had engaged them from about May last year. And for a whole year, we were telling them, you guys don't have enough money to keep this program running. Up until the point where we had to, when we were $25 million, overspent, we had to suspend the program and tell them we're not going to connect anymore. Now that presents a risk to the business. It's our mandate to connect. The first time in its history, Umeme was there suspending, the connections, and I'm the one who wrote that suspension notice. But we had to do that because if we didn't do it, we're going to run out of pocket. That's the risk that you have to address, that you're actually going to run out of cash to be able to deliver on your mandate, because it's a program where you spend money and the government reimburses you. You spend $25 million and the government hasn't paid you a penny. So these are, when you think about risk management, it's the spectrum for this kind of business is enormous. But I think having dealt with the issue of ensuring that from the strategic risk level, we can now go to tactical risk, and we have our risk management team that works with all the departments and all the sections within the departments to run through all the life cycles of all their processes to make sure that we identify every single area of what could go wrong, and then we put in place the necessary risk management mitigation strategies to ensure that we can address those. And then we embed down that to the operational level, because even the linesman who is there climbing the pole has to ensure that they manage their risk, that they have the necessary protection equipment, that they follow the necessary operating procedures of the network based on the training that we give them, which is part of managing risk, and so on and so forth. And I think if you look at our safety record for this year as an example, we have about 6 people have died on the network. Now, if you look at last year there were about 38. So we've improved significantly as a result of being able to bring that risk management culture all the way from board level right to the operational level, the guys who are in the field serving customers on a second by second basis. Thank you.
Right. Thanks, Blessing, for that comprehensive rundown. Looking at Umeme, clearly the stakeholder management matrix is a complex one, both public and private. I specifically on the issue of COVID, I heard you talk about two specific plans, a business continuity plan as well as a pandemic management plan. I think first time I'm hearing about that specifically. And you also elevated the role of making sure that the people are safe. Flavia spoke about people's safety as well. And in COVID, it's something that has become a lot more relevant, the risk around personnel. And Tendayi, that will bring me to a question to you, which also ties in with what Kenneth had asked. And I'll read that out and also put it together in my question. But I know Kenneth says that, going back a little, by specifically highlighting the current challenge of COVID-19's effect for the past several months, one of the biggest risks is a loss of key personnel in an organization due to COVID-19. And he asks, so please help me understand, how does an organization mitigate against such a risk from an insurance perspective?
Thanks, Kenneth. I think insurance is not a panacea to all risk-related problems. What, from an insurance perspective, are they insurance-related policies that assist with, loss of employment or people who have been affected by COVID? The answer is certain products have been developed, not that widespread, but I would not want to focus on, I would want to tackle the question from an insurance perspective, because it then doesn't do us justice to the question. What needs to happen, or what we've seen happening, is as COVID hit, the shores of the majority of the countries, there was a significant shift from being office bound, right, to work from home. Working from home then brought in massive, call it, savings. As an example, I think a lot of organizations are in the process of actually reviewing, do they need the real estate or the massive office space that they previously needed. Within Marsh, I'm based in South Africa in Sandton. When we went into lockdown on the 27th of March 2020, 2 weeks prior to that, a decision had been taken at an organizational level. We are going to be working from home, right? We occupied a considerable amount of office space, right? And having gone, call it 10 months into the year, working from home, in this 10-month period, I've only sat in the office once, which was probably sometime last month. But organizations then start, thinking, do we really need all this office space, right? And in many instances, the answer is going to be no. So there are going to be savings that are going to be realized by virtue of employees working from home, right? And out of these potential savings, because you're going to save, you're saving on your telephony, you're saving on your real estate, you're saving on your carbon emissions tax. So there are massive savings which are accruing to the organization. And it is my personal view that what the organization is realizing in savings has to then go towards, right, sustaining or reducing the financial burden of potential job losses that are going to be the impact or the result of impact COVID is having on personnel. So I think there are means and ways that organizations can look at or consider in terms of lessening the financial burden of possible job losses. From an insurance perspective, very few are going to be available. But insurance is part and parcel of transferring your financial risk to a third party so that they can take on that responsibility in the event of a loss. So it will then not be prudent for insurers to go down that route, because it's kind of like a given that people are going to lose jobs. But at an organizational level, it's then looking at how best do we change or adapt, right, our operational processes, and in that process ensure that we reduce the impact of possible job losses at an organizational level. Thank you.
Thanks, Tendayi. I'll come back to you on that. I was blessing the number of people you employ as an institution. Kenneth's question is quite an interesting one. Of course, COVID is unfortunately taking quite a few lives. And that loss of key personnel is a risk that's with us and is going to remain with us across the entire chain. Have you guys thought about that, and have you put in place some critical ways of ensuring that you have continuity? You spoke about the 30-50 rule. Have you sought insurance for such a risk of losing key personnel and what that would mean for the business?
Thank you very much, Kenneth. And to Kenneth, who also asked the question, very good question. COVID is real, yeah, and I can guarantee you, as a risk professional, I was watching all the videos on YouTube, December, January, February, about all the deaths that were going on in China, in Italy, in Spain, in the UK. And therefore, we needed to respond quickly in advance before anything happened at Umeme. I know the president tried to show people these videos, but for the most of the population, it doesn't make much sense. But for us, it does. And as a risk professional, it's incumbent upon us to think about this well in advance. Now, just in the last couple of days, we've lost James Saka, who is the former ED of the National IT Authority. Today, I lost my former boss at EY, who died from COVID this afternoon. He trained me in risk management. So that's how close, COVID has come. So how did we deal with it in Umeme, and how did we deal through additional engagement with them, the Ministry of Health, and so on, they were able to adjust the policies to cover certain things. For instance, now they are able to cover testing for people who have symptoms to a specific, value. Beyond that, we also created a WhatsApp chat group, several WhatsApp chat groups, where we had 100 people on each chat group, but with Jubilee Insurance professionals also on those chat groups. And we call them Jubilee chat groups. And we would make sure that we would give all our staff the latest information regarding what was going on with the COVID pandemic immediately on the chat group whenever somebody raised an issue, whether it had to do, and I guarantee you, those things came up. People would say, I have a fever, I've gone to this medical center, they've not supported me, what do I do? And the Jubilee Insurance guys would come up and say, please go to this specific hospital, you'll be covered there, and so on and so on. And that helped us tremendously. So we were able to have the policy amended. We were also able to get, as I said, additional coverage, and we were able to use that channel to pass on a lot of health information to our staff. So how to prevent COVID? What is COVID? What can you do to make sure you don't get it? How do you protect your family, etc., etc.? When you look at all that, from the time COVID hit Uganda in March to about September, Umeme had 0 confirmed cases of COVID-19. However, we saw with the NRM primaries that presented the biggest risk to us in terms of the start of seeing COVID, cases in Umeme. And it came to pass. Everything we almost predicted happened. We got the first 4 cases, and then after that, there came history. Now we have 33 cases in the company, confirmed, 22 fully recovered, 11 who are recovering. We give updates to all staff every day on the COVID-19 situation in terms of all the national figures coming through from the Ministry of Health, plus all the figures relating to people within Umeme, including where they are, the numbers per location, and so on. So that goes out in an email communication in a nice graphical chart format every single day. We also sent out a big kind of chart to staff on how to deal with this based on engagement with our medical insurance and on how we can handle that. And we shared that with the sector on one of the leadership platforms, and it was acknowledged that Umeme, based on what was shared within the sector, had the best preparation and protocols in relation to managing the COVID-19 pandemic. So far, we've lost nobody. When it has come to areas where we had one case where we had an asthmatic staff who got COVID, and she was really, had gone up to ICU. We were engaging, even at that point, through our HR with the insurance team to see how we could provide, a better coverage for her, which they did. She was transferred to a different location. They managed to get her back, and now she has recovered. So we haven't lost anybody, and even I'm involved in those conversations. The key thing is not to lose a single member of staff. We'll do our best to make sure that doesn't happen, and we'll leverage our insurance providers to try and make sure that doesn't happen. But risk management is a daily thing. It's every hour, every second. You have to keep on seeing where the risks are coming from for every single individual, for the company as a whole, and to manage that effectively. Thank you.
Right. Okay. Thanks, Blessing. It's interesting how time runs when having a good conversation, right? We would have to wrap this up pretty quickly, but and I'll start with you, Flavia. Listening to the experiences that Blessing has shared, the experiences that Tendayi has shared, and broadly, if we just zoom a bit and go back to the whole fundamental setting up a risk management framework for a company, I would like you, and I'll go around the table as you also share your final thoughts, to just talk through around. You must have experienced some challenges in setting up all these risk management frameworks. What have those challenges been, and what recommendations would you give to someone who hasn't yet started on this journey of making sure there's a framework in place? Flavia, I'll start with you, and then we'll go around the table.
Thank you very much for that question, Kenneth. For risk management to be effective, it has to it actually has to become a culture, a way of life and behavior. And that is the biggest challenge with realizing the effectiveness of risk management in day-to-day, that if the risk manager has not pointed something out, you have grown this practice to the point that you don't even have to specifically talk about risk, but the way you act, the way you make decisions, you see that risk management is embedded therein. So it's often challenging, especially when you're setting up this framework, because the understanding of what risk management is, if this understanding is not common, is not uniform, if management has a different understanding of what they're trying to achieve from risk management, from the operational managers and the line staff, then it simply cannot work because you're not at the same footing. So building that communication line, that communication strategy that uniform language for risk management across the company, the very, very important ingredient to you realizing that maturity in the risk management process, for you to be able to communicate the value that individuals themselves can derive from the risk management practice, for you to be able to have everybody understand their role and their responsibility in the risk management practice. Those are some of the biggest challenges to actually seeing this practice being effective and efficient and helping you realize your objectives. But it's not all doom. It's something that you can easily overcome, especially if the tone is consistent from leadership of the company, if they are seen to care about staff and to consistently communicate risk and what they are doing about it. The rest of the company quickly picks up on that, and you find that becomes a way of life that becomes what embeds everything you do as an organization. So building that culture is the most important ingredient to seeing effective risk management, and it's something we can achieve through consistent communication, because information is power. People need to understand, people need to see the benefits, and people need to be able to see what's in it for them as individuals and as the organization. Thank you, Kenneth.
Thank you, Flavia. Thank you very much for those remarks. Risk management is a culture. Risk management is everyone's responsibility, and communicate all the time. I think those are my few takeaways. Blessing, I'll come to you and then we shall wrap it up with Tendayi. Please, if you could just summarize it in about 2 minutes. Blessing.
Yeah, sure. Thank you very much, Kenneth. And I'm not going to repeat what Flavia said because she's spot on. I think I'll just speak to how we achieved it here in Umeme, and that was by pairing risk and strategy. From my perspective, strategy is based on facts and risk. You can't determine risk appetite if you don't understand risk, so you have to then identify and assess those risks. But the most important way in which we embedded it within the culture of the organization is through the process approach. So what we did was a business process reengineering exercise across the company, where we went into every single department's processes and looked through all the life cycles. And then as we did that, we identified everything that could go wrong. So as we were doing that, what could go wrong, identify all the risks. And then we got people to therefore start, speaking the language of process and risk. Process, risk, strategy. Process, risk, strategy. And then based on that, we then were able to, of course, re-engineer all the processes, automate. And as we went through any major, say, IT, innovations, we would then ensure that risk management was embedded in every single major project within the company, both in terms of IT implementations, HR implementations, and capital investment programs. So risk is a part and parcel of everything that we do. Thank you, Ken.
Thank you, Blessing. Tendayi, I'll pose the same question to you and just add on one last caveat. At the end of the evaluation process and moderation process, you spoke about going into insurance or not going into insurance. The other thing I'd like for you to discuss as well is, what would you tell that person who says insurance is too expensive as part of a risk management process?
Great stuff. Thanks, Kenneth. I'll also not repeat what Flavia and Blessing have alluded to. But I think one of the most important things is showing the value that risk management brings at an organizational level. Risk predominantly has been regarded as a cost center. And I think what COVID has then done is it has brought risk management professionals to the fore. Before things are done, the question then is asked, what are the considerations from a risk management perspective? So we have to slowly start showing the value that risk management brings at an organizational level. I like what Blessing alluded to in terms of, the process approach. They adopted risk strategy, outcome, right? And that's part of showing value. But more importantly, we as a profession, I think we then need to start showing, one is value, and part of showing value is then using business intelligence, right, to the benefit of the organization, showing that it's not about, it's not a compliance-based approach, but there's actually real value in the processes that we follow as risk management professionals. So it's showing value. It's showing the impact that we've brought to the table. Listening to Flavia and Blessing, I think that impact can be felt in their organizations, and all of a sudden, people then listen to us as risk management professionals when we engage with leadership. Another consideration has been, at what level is risk management pegged within the organization, right? So it has to, you need to engage with the relevant stakeholders. And in this particular instance, it's engaging with EXCO as well as engaging with the board, because these are ultimately, Flavia spoke about tone at the top. That's where the tone at the top is set. Then I guess for me, the biggest takeaway is then, implementation, getting everyone on board and dispelling the notion that the fact you've got a chief risk officer or you've got a risk management department, it is not the risk management department role and responsibility to identify risk. Risk has to be inbuilt into organizational processes. As you decide that you're going to set up a power plant, you have to start engaging with operations and say, what are the key risk considerations? What are we going to do about it? And so that it becomes wholly ingrained, right? From the moment people conceive of an idea, it's having that discussion with, a cleaner, understand the impact, value one they bring to the organization, and the impact there is of not having a cleaner on board. So it's about showing value and making sure that everyone is on board, making sure that as risk professionals, we understand how operations are run, so that when we engage with business, we are able to engage at the same level and use the same language that business uses. That's part of dispelling, the notion that risk management is a difficult science. To your question, to someone who says insurance, it's subjective, right? About looking that are lost as a result of not having insurance. I would rather at a personal level deal with a non-financial loss, which is my premium, than having carried the burden of, as at an organizational level, at a personal level, of having to worry about. So I'll talk at a personal level. If you've got a car and your car is worth, say, 100 on an annual basis, than having to carry the risk of potentially 20,000 financial burden in the event of a loss. So it's about proportionality. There's always that argument that when nothing happens, I have lost financially. But the reality of it is paying that 200 US dollar premium on an annual basis gives you peace of mind, to the extent where possible that when that 20,000 US dollar asset is lost, the asset because someone else, which is an insurer, is actually carrying that financial burden for you. So it's not expensive. Just consider the value of, one, your assets. That's the first thing. Secondly, what happens in the event of a disruption to your operations. It then goes beyond, the financial burden. It's disruptions. It's then having, how much time is it going to take? Those levels, pre-loss levels, but more importantly, where are you going to get the financial resources if you didn't have insurance cover? So it's a necessary evil. It's important. I think we just have to change our mindset and put things into perspective. Thank you, Kenneth.
And thank you very much, Tendayi. Ladies and gentlemen, I apologize. We have gone about 14 minutes over the time that was slotted. Clearly, it's been a good conversation that can go on for a while still. But what I pick out from this last bit, and thank you to Blessing, Flavia, and Tendayi, an identification of risk, the fact that, going through the business process reengineering that you spoke about, Blessing, is a nice way of making sure you can identify all the risks and evaluate them effectively, and then come up with potential mitigants against these risks. Ken's question is going to remain the elephant in the room. If you can really go against losing personnel during COVID, what sort of premium would that be? I guess our friends from Marsh would find some people who can start putting a premium to that and get back to Kenneth. But ladies and gentlemen, thank you very much for the time and for giving me the opportunity to have this discussion with two gentlemen and lady.